So here's an interesting thought. You know how they say that freedom isn't free, right? What if the cost for freedom is simply too high for the platforms that we're currently using? I always kind of think of that whole statement, freedom isn't free. And one of the things that I always wonder is, okay, but why is it that the Middle Easterners always have to pay for it? Seems like a very screwed up payment plan, right? As an American, when you go to school and you're a kid, you're told by all your teachers and such, remember, boys and girls, freedom isn't free. And then when you grow up, you sign up for the military, and then you go over, and then you bomb the ever loving crap out of some Middle Easterners, and there you go. There you go. You made the payment. One of the things that I always wonder in life is, why do the Middle Easterners have to pay for our freedom? I mean, thanks. Thanks. It's better than us getting carpet bombed, to be honest. But I just don't really understand how that math works out. But anyways, it's an interesting thing to be thinking about when we think about freedom and when we think about the cost of freedom, and then we think about who actually bears that cost. Again, with so many of our foreign adventures as Americans, for some reason, it's always people of color about 8,000 miles away that have to be slaughtered for our freedom, right? They are paying the price for our freedom. And you don't really think about it that much. You're just like, yes, freedom isn't free. And then you just go about your day. Why I think about this is we have the issue going on with GameStop right now. It's GameStop apparently, and Dogecoin apparently, and AMC, and Bath and Body Works, or Bath, Bed and Beyond, or something like that. And basically what we're having is the trading firms, the platforms that people use in order to buy and sell stock in these particular equities, are now shutting down the ability to be able to actually be able to buy and sell in those equities. And a lot of people are screaming about freedom, right? Their freedom is being revoked. And I would think about this with a few of the videos I've done recently talking about Twitter, right? So Twitter is bringing down the ban hammer on a lot of people at this point. Ban hammered Trump, ban hammered the My Pillow guy, ban hammering a whole bunch of different people. And one of the reasons I think that this is so irritating to so many folks is I actually brought up the blog post from like 2011 where Twitter, and this is still on Twitter's blog, where it says the tweets must flow. That basically Twitter came out in a public statement and said that freedom of speech, freedom of expression is paramount, even if it pisses off a whole crap ton of people. The most important thing is freedom of expression and freedom of speech. Now we fast forward about 9 or 10 years, and all of a sudden they're cracking down on freedom of expression and freedom of speech. And one of the things that I always wonder with that is basically, were they possibly too naive at the time? Did they not realize what the full cost would be to their platform to be a completely free speech platform? And now, 9 or 10 years later, they're actually doing all of the math, doing all of the accounting, and realizing, oh, maybe this isn't working out so well for our business, and now they're trying to crack down, but they're trying to crack down in such a way is basically they're trying to remove a freedom. They're trying to remove a prime selling point for why so many folks came to the platform. I look at this with Robinhood. So basically Robinhood right now, in one way or another, appears, my opinion, it appears to be manipulating the GameStop stock. And there could be a lot of reasons for why they're trying to manipulate the GameStop stock. So basically GameStop stock. That's a tongue twister. GameStop stock has shot up. It's now up to about $351 per share on Friday. Basically, this is from what is something called a short squeeze. So the Wallstreetbets Reddit forum, the folks over there decided to screw the people that decided to short GameStop stock. They are pushing up the price as high as possible. Basically, you get more and more people purchasing the GameStop stock. The stock keeps going up and up and up and up. And then yesterday, Robinhood literally turned off the ability to be able to sell GameStop. or to buy, I'm sorry, to buy GameStop. It was a really interesting thing. They didn't stop all GameStop transactions. You were still allowed to sell GameStop stock, which would be good for the short sellers because that would drive the price down, but you couldn't buy it anymore. So there's a lot of questions out there about why this happened, and there are some very relevant ones that are kind of interesting. So one of the big concepts is whoever is one of the big investors for Robinhood was also losing a lot of money in these shorts, and so basically they just simply called up Robinhood and said, hey, stop this. Stop it. This is a problem, so fix it. So that is theoretically a possibility. Another possibility is basically Robinhood, the way that they are able to offer free, commission-free transactions is basically by selling their services. So they are selling the information, the buy-sell, the order flow. And so another argument was that basically the people that buy and sell that order flow came in and said, hey, you need to stop doing this. You need to do something about GameStop. And so Robinhood backed off. Then there's another interesting thing to be thinking about is that they may just have run out of collateral, something that sounds just very boring, but many times in the real world, very boring is reality. So when you are buying and selling stock, there is an actual transaction that is taking place. Like one of the big problems we run into in this modern world of these apps and these platforms and all of that is you forget that something's going on in the back end, right? It's like it magically works. Well, especially when you get into things like financial instruments, especially when you get into money, there's a lot of things that are going on in the back end that may be happening very quickly, but they still need to actually happen. And so when you're buying and selling these stocks, there has to be money that is actually put on the table, basically to guarantee that the transactions will go through. So when you buy a stock, Robinhood has to put up a small amount of collateral just as a guarantee that the transaction will occur. The concept here is that a GameStop stock, there were so many transactions going on for that particular stock, it was pushing up the requirements for collateral to such a degree that Robinhood was saying that they were not able to cover all of that collateral, and that is why they had to stop allowing people to buy the stock. Whatever the reason is, I think it is interesting to just be thinking about this with our modern platforms that we're using and ask ourselves, what is actually going on here? What are their priorities? What rules, regulations, other things do they have to abide by, and can that gum things up for us at the end of the day? Again, I look at something like Robinhood, and I don't think I would use Robinhood at this point, ever going into the future, right? If I am buying and selling stocks, and I come up with my little routine, and I decide that I'm going to go through a particular trading strategy, and then all of a sudden Robinhood turns off the ability to buy or sell stocks, that may cause real massive problems, right? Again, especially if you're buying and selling a rather large amount, that could be tens of thousands or possibly hundreds of thousands of dollars lost simply because the platform is not willing to complete the transaction. Again, you think about the Twitter world, you think about Twitter or Facebook, when they shut down your account or when they do something stupid and they screw around, basically you're losing your tweets, you're losing that little bit of communication. If something goes wrong with something like Robinhood, all of a sudden you could lose a tremendous amount of money really quickly. And so it's something to really be thinking about as we go forward and as we start to use more and more of these platforms in our day-to-day lives. If we go over, we take a look at one of the articles talking about this. This is over at CNET. They're talking about this now. So Robinhood is now allowing limited buys on GameStop and AMC, but the app is now restricting some crypto transactions after digital coin Dogecoin spiked. GameStop's stock market adventure continues, with shares jumping more than 70% in early trading on Friday. The spike comes as Robinhood opens limited buys on GameStop and AMC and other stocks after the trading app restricted some transactions the day before. However, the app on Friday confirmed that it temporarily turned off instant buying power for cryptocurrencies due to, quote, extraordinary market conditions, as the price of Bitcoin and Dogecoin, a digital coin inspired by the popular dog meme, also rose sharply. Behind meteor meteoric rise of GameStop, Dogecoin, and other stocks, Reddit users who have banded together to take on the Wall Street establishment. The rebellion experienced a hiccup when individual investors found out some trading sites and apps had restricted transactions and securities of the beaten-up video game retailer, as well as movie chain AMC and other companies. Robinhood, a popular investor app, preventing customers from purchasing more shares of several companies, but it's allowing for limited buys starting Friday. On Thursday morning, Twitter users began posting screenshots of the Robinhood app that showed a message appended to the pages of GameStop, AMC, Nokia, and Bed Bath & Beyond. This stock is not supported on Robinhood. And again, this is where I talk about words, and I think it's very, very interesting when we see words pop up. These stocks are not supported by Robinhood. And you're like, what the fuck does that mean? What do you mean this stock is not supported on Robinhood? That's weird. Robinhood explained the move in a blog post before trading opened. Quote, in light of recent volatility, we are restricting transactions for certain securities to position closing only, including AMC, BB, BBBY, EXPR, blah, 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 the company wrote. In addition to AMC, Bed Bath & Beyond, GameStop, and Nokia, the companies listed by ticker symbol are phone maker BlackBerry, fashion retailer Express, headphone maker Koss, and underwear company Naked Brand Group. Robinhood later sent an email to customers saying it would allow, quote, limited buys of those securities starting Friday, and made the decision because of U.S. Securities and Exchange Commission regulations. And again, it's kind of interesting when it says this. It made the decision because of U.S. Securities and Exchange Commission regulations. So does that say they were limiting the buys because of U.S. Securities and Exchange Commission regulations, or they were allowing buys because they may be violating the law? Again, it's interesting when you look at those words and you're like, well, what does that actually mean? Robinhood's CEO went on CNBC Thursday afternoon to explain why the investment app decided to restrict users from purchasing shares of GameStop, AMC, and other companies. Quote, in order to protect the firm and protect our customers, we had to limit buying in these stocks, Tenniff said. He also denied there were any liquidity issues with the company. And again, notice words here. Notice words. Notice words. Words have meaning. Words have meaning. Right? If you're not the customer, you're the product. If you go to Robinhood and you're getting commission-free trades, you're not paying Robinhood. You're not paying Robinhood. So something to think about here. A customer pays the company, right? A customer or client pays the company. So if you're not paying Robinhood and Robinhood is being paid from other people, to be clear, words matter, that means those other people are the customers. And so if Robinhood is protecting our customers, that's not the same as Robinhood's users. That's not the same as Robinhood's users. Again, this is the whole question in the social media world, the platform world, and all that kind of thing. You use Twitter, but you are not a Twitter customer. The advertisers are Twitter customers. The people that buy access to the feed are Twitter customers. You are a user. So if Twitter comes out and says they are trying to protect their customers, they say that word, that means they're trying to protect their advertisers, the people buying features and functionality and all that kind of stuff. If you go to Facebook, again, people paying Facebook, they are the customers. If you use Facebook and you don't hand over a dime to Facebook, you're a user, not a customer. So if Robinhood is trying to protect its customers, what does that mean, boys and girls? Like, that's a very scary concept right now, right? Because again, we've been talking about this for a decade. The whole thing, if you ain't buying, you are the product, right? Blah 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 blah. But the interesting thing, like one of the things is as we move along with technology, what business model was used in one sphere gets transitioned over to a different sphere. So if the social media model worked in social media, and then you start moving that business model over into financial transactions, a lot of baggage moves with that business model. And one of the pieces of baggage that moves with that business model is that the users are not customers. The people paying the platform are the customers. And so, if, to quote from the CEO, that they are trying to protect their customers, that has a very different connotation than what you first think if you're just skimming through and not really thinking about it. A class action lawsuit was filed Thursday in Southern District of New York. Webull, another investing service, tweeted Thursday that it had begun restricting trades on shares of GameStop, AMC, and COS. Webull cited extreme volatility of the stocks in limiting user transactions to close positions. It later removed those positions. TD Ameritrade, another brokerage, said Wednesday that it would put restrictions on trading of stocks for GameStop, AMC, and others. The brokerage firm confirmed the restrictions, saying it made the decision out of an abundance of caution and unprecedented market conditions and factors. In the interest of mitigating risk for our company and clients, we have put in place several restrictions on some transactions in GameStop, AMC, and other securities. A TD Ameritrade spokesperson said the restrictions include increasing requirements needed to borrow money for stocks known as margin and limiting transactions such as short sales. And again, this is something to be thinking about with these different business models where you can have companies that are basically providing the same type of service, but their business model is entirely different. So this makes sense from TD Ameritrade. So basically what TD Ameritrade is saying is for GameStop and for these what's going on with these insane stocks right now, that they are limiting margins and they're limiting short sales, right? So that makes sense from a business standpoint. So basically what margin is something that should just be illegal. It should have disappeared back in 1929 and never fucking come back. I had a buddy of mine. Literally, he was 2 months off of retiring as a 40-year-old. And 4 months later, he was bankrupt moving into the ghetto. That's not a joke. Anyways, and one of the reasons why is his portfolio was based on margins. And so basically what a margin is that you can literally borrow money. You can borrow money to buy stocks. So let's say a stock is at $130 and you think it's going to go up. You don't have $130. So let's say you borrow, $100, and that's on the margin, and then put in 30 of your own. And then if it goes up, you get that profit. The problem is if the value of the stock goes below whatever that margin number is, there's something called a margin call because you are required to pay that if it's demanded. And so the problem is people can basically go bankrupt because they are investing with literally more money than they actually have. Again, I find this very funny, again, especially being around the startup world. The government is really certain that in order to invest in a startup company, in order to write a $10,000 check to a startup company, you have to jump through all of these hurdles, and there's all these SEC rules and regulations and all of this crap going on. But you can buy a house and be underwater in a heartbeat, and the government doesn't care. You can buy stock on margin. Like, that makes a goddamn bit of sense. And the government doesn't care. But anyways, what TD Ameritrade is simply saying is, look, this is risky. Like, you can buy GameStop, but if you're going to buy GameStop, you got to put all $351 down. Right? And I think any reasonable person is like, yeah, that's probably a good idea. If you want to buy GameStop right now, you should be able to pay for all that GameStop you want to pay for. And again, limiting shorts is also probably a good idea because this crap is just getting really insane. So it's interesting to look at this, where TD Ameritrade is targeting very specific things with these stocks and is a very narrow, targeted restriction that makes absolute common sense. Like, you look at it, again, TD Ameritrade, you're the customer of TD Ameritrade, and they do these restrictions. Whereas on the other hand, Robinhood, who is protecting their customers, words have meaning, they're protecting their customers, Robinhood shut down all purchasing of GameStop. And again, you can have businesses that operate in the same world, but they're two entirely different business models, and so how it works out at the end of the day could be significantly different. So I'm just saying, if you actually have a couple of dollars in your pocket, if you actually are going to be an investor, this is one of those times I would take a look at it and go, you know what, TD Ameritrade, they're looking a lot better than Robinhood right now, because again, that restriction makes sense. NASDAQ CEO Adina Friedman told CNBC on Wednesday that the stock exchange would halt trading and investigate if it believed somebody was manipulating the market. And so now we're starting to see some interesting things where they're saying that they would halt trading if they believe somebody was manipulating the market. AMC is listed on NASDAQ while Gamestop is traded on the New York Stock Exchange. And so again, when we think about who owes allegiance to whom, does NASDAQ side with the retail investors, or does NASDAQ side with the hedge funds? So if they start shorting, again, what is market manipulation? Is market manipulation Wallstreetbets trying to drive the value of the stock up, or is manipulation Robinhood apparently trying to drive the value of the stock down, or and who gets to decide that at the end of the day? Because as soon as you shut down that stock, most likely the value of that stock is going to go down. The SEC is also following the situation. Quote, we are aware of and actively monitoring the ongoing market volatility in options and equities markets, and consistent with our mission to protect investors and maintain fair, orderly, and efficient markets. So this is an interesting thing now coming from the SEC. Again, fair, efficient, but they also say orderly markets. So again, where could the SEC step in on this mess? The SEC said in a statement Wednesday, we are working with our fellow regulators to assess the situation and review the activities of regulated entities, financial intermediaries, and other market participants. So this is, I don't know. This is what's going on this minute with Robinhood and GameStop and all these other things. Basically, my takeaway from this, frankly, really not too much snark here. I don't know exactly why Robinhood is doing what Robinhood is doing, but my takeaway here is you can't trust Robinhood. Again, just like you can't trust Twitter and you can't trust Facebook. Again, I'm not on Twitter and I'm not on Facebook, and I'm sure as fuck not on Robinhood, right? I think a very important thing to be thinking about with all of these platforms is literally, can you trust them, right? There is an investment to use any of these platforms. You're no longer a customer of any of these fuckers. But anyways, right, once you become a user of some platform, right, there is investment there. You put your money into their system. You learn how their system works, right? You come up with your methodologies and your workflows. There is a real investment there. And so one of the questions that you have to ask yourself is, if a platform like Robinhood at any point in time can start restricting how you buy and sell equities on crypto or whatever on their platform, is that a risk that you want to take? I know someplace like TD Ameritrade, that may seem lame and old school and boomer. But again, if you look at TD Ameritrade's coming out and just saying, you know what? We're not going to allow you to buy this stock on margin. We're not going to loan you money to buy this stock. And if you're going to short it, we're going to make sure you know what the hell you're doing. But otherwise, if you've got $351 to buy the stock, by God, buy as much of it as you want, right? Again, you start looking at it, and from these different businesses, you start thinking, again, what business at the end of the day do you really trust, especially when you have a lot of money on the line? I can't imagine using Robinhood at this point. It's like using Robinhood at this point really reminds me back when I lost my shit at Facebook, right? So a number of years ago when I deleted my Facebook account. So back then I had like 30,000 likes on my Facebook page. So I had a page that I advertised on for Facebook and the whole 9 yards. I had my Facebook account. I deleted all of that crap once it came out that Facebook had been conducting psychological experiments, like real psychological experiments on its users without any notice, and they were literally trying to see if they could affect the emotions of their users, right? When I saw that Facebook was willing to be that unethical and they were actually doing that in the real world, that was when I killed my Facebook account and basically haven't gone back. When I look at this with Robinhood, that is basically my same conclusion. My conclusion is I'm looking at this platform. At any point in time, it can start restricting the transactions that you're doing. Most likely, if you're using a platform like Robinhood, you're some kind of equivalent of day trader or whatever. You're buying and selling. And it's not like you're buying and holding for 3 months, and so if you have to hold it for another day, it doesn't matter, right? If you're using Robinhood, you're most likely buying and selling quite a bit. And so at this point, they say at any point in time, for any reason, they will protect their, wait for it, customers. And your ability to perform transactions might be ripped out from under you. So again, what happens if you buy GameStop at 300? You think it's going to 350, they rip out the ability to buy GameStop stock, and it goes down to 200. You literally just lost $100, not because of your planning, not because of what happened, like realistically with the market. You lost that money because Robinhood decided they knew what was best for, wait for it, their customers. And how in the hell can you use that platform? Robinhood has shot the shit out of all of their credibility. And if you're still using it, I would highly question why. Because they can screw you at any time. They can screw you hard at any time. I mean, you think losing a Twitter account or a Facebook account or even a YouTube account sucks? My golly, can you imagine if your equity portfolio that got screwed up by some asshole Silicon Valley piece of shit that wants to be your daddy? Anywho, so yeah, so this keeps going. This keeps going. Well, what are you doing, Eli? Buy and hold for a long damn time. You buy, and then you just put it away. I don't know. A year from now, go back, take a look what's there. Get a little more of this, sell a little of that. I think that's honestly like the real strategy. Because if you look at this from an investment standpoint, I am not a financial advisor. I'm not a financial advisor. All I'm saying is if you look at a lot of this stuff from an investment standpoint, even if you have 4 million people on Wallstreetbets, that's actually not a lot of people. That's actually not a lot of money, right? If you have 4 million people on Wallstreetbets, they all dump let's say $1,000 they're able to invest. That comes out to $4 billion. If they're able to invest $10,000 a piece, that comes out to like $40 billion, which is actually not much, right? That's 1.5 Twitters at this point. And that's one company that actually kind of sucks ass. So one of the things that I would say is with all of this stuff is we are going to see more and more populist investing. But it's going to go on its own cycle. The big trillions of dollars, I would imagine financially, from the financial markets, the trillions of dollars that get invested, those still have to have plans. Those still have to, people draw out, all of the strategies and everything else to make that happen. If you're dealing with, the CalPERS, the California public, the retirement fund, that type of thing, when you're dealing with, hundreds of billions or trillions of dollars, again, what's going on in Reddit is very interesting. And then you go back and you do your real investing. I think at the end of the day, I would argue at the end of the day, you buy stocks based off of what you feel are solid principles. You sell stocks based off of solid principles. And hell, if for some reason Wallstreetbets targets your stock and it goes to the roof, sell that shit and move on. I think that's like the only new strategy that I would have. I'd say like the only new strategy I would have is that basically if the stock I had invested in goes up by 10x for no good goddamn reason, sell all of it. Go to the next thing. I don't know why it went up by 10x. So I will take my money now. Take the chips off the table. Wallstreetbets is doing something insane. I will take the largesse and leave those kids to play. But I am not a financial planner, not a financial advisor or anything else. So anyways, what do you think about this? What do you think about the idiocy of I don't know what's going on in the stock market, the short squeeze, Robinhood. What do you think? What do you think about Robinhood now restricting willy nilly? Again, it's interesting. TD Ameritrade, they're restricting a couple of things that are basically obvious on the face of them. Right? We're not going to loan you money to buy GameStop stocks. That makes sense, right? But if you look at Robinhood, they're doing all kinds of willy nilly shit. What do you think about that? Do you trust? Do you trust platforms like Robinhood now? Do you think you can trust them going into the future or ever again, or have they shot any trust that they might have? Put your thoughts down in the comment section down below. If you like my shows, you want them in audio only format, you can get them on iTunes, Podbean, and Spotify. Not everything that I do is clickbait enough to make it to YouTube in a timely manner, so do make sure to go to those podcasting services. If you still want my educational videos, you can go to EliTheComputerGuy.com, where I have classes and code samples and parts lists and diagrams, the whole 9 yards. We are going to be having more classes, once I get done with my move. I'm moving off to Appalachia. Leaving the Baltimore area, moving off to North Kakalaki. And so once all that is done, I am going to start putting more classes back onto Eli the Computer Guy. So there's that, and then the Daily Blob, of course. If you want to see me build IoT projects in real time or pack, the last few days I've been packing. This is my artwork. I have art. Oh, you think it's a joke when I say I collect art? See? Look! It's in those boxes, I swear. Anyways, if you want to see me, whatever, screw around, you can go to the Daily Blob channel. And with that, I will see you folks later.